Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information and meet you where you are financially so that you can stick to your budget, manage to pay off your debt, all on your path to building wealth. Today, guys, I think it's important for us to discuss the opportunity. Will you ever be able to afford a home? If this is your first time joining me here on the channel, go ahead and hit that subscribe button and you'll be notified every time I upload a new video. Now, I know this should not come as a surprise to you because we're in one of the biggest housing bubbles or housing economic crisis that we've seen since 2008. And so it begins to ask the question, should or will I ever be able to afford a home? For a lot of people, you've already gone to college and you're making a decent income, but then you start to see these housing prices start to get out of control and with seems to be no end. Well, first, we want to talk about your opportunity to purchase, but then also things you can do to put yourself in a position to make sure that you're in the best position to buy. But first, let's look at what's the housing situation. Well, we understand that with lumber prices going out of control, with having more homes on the market than are able to be bought, meaning there's a seller demand or buyer demand for that matter, and seemingly with interest rates being so low, all these things calculate to be a ridiculous situation for you to be able to purchase a home. And how does that really factor into the fact that with the housing prices going up, it makes it even harder for you to have that down payment in order and be competitive with your offer in order to secure a home, because it might just go out your price range that quickly. You also turn the fact of most people that are trying to purchase may fall into that millennial age bracket. And before we even reach the COVID economic crisis, the question of home purchasing and that important life event to really begin that transfer of wealth and begin that wealth accumulation for this age group has been on hold for many people already. Putting off a family, putting off marriage, putting off the things that really help move your life forward. And then the way our economy works can actually help you gain more wealth in the process have been placed on hold in a large part due to the fact of the debt that they are underneath, meaning the student loan debt, meaning even credit card debt, car loans, all these different things. So you add in now the factor that housing has now which is seemingly a good purchase and a good step to make, but the point is getting out all over the country, can make it very difficult and make it seem like, will it ever be possible to have this quote unquote American dream? So if you're going to purchase a home, what are things you need to be looking for? First, you need to think about what can you afford. The ideal spot you want to be in is 25% of your net income. Now, I know that can be very conservative, and obviously, if you're at 25%, you want to think about not just your mortgage payment. You want to think about your taxes, the insurance, even if you have to pay some sort of PMI. And you want to wrap that into that housing cost just to allow yourself breathing room so that you can grow. Now, as your income continues to increase that can be helpful, but you want to make sure that you are conservative when you're going into this purchase, because number one, taxes or value for your home may go up quicker than your income. And we all know from historical trends that income has been a little bit slower versus when you look at the price of goods going up. This situation is no different. Interest rates kind of help you in this scenario because, hey, you can afford more home, but that's kind of offset with the amount the prices are rising on the home just so that you can be able to purchase. So you're not really getting any benefit overall. But next, in order to get good qualified, you have to understand that what is your debt to income? What is how much are you able to put down? All the different factors that go in, and are you able to pay the closing costs? Are you able to roll it in? What type of loan do you need? These are things that should be important that you should be concerned with. So in order to get qualified, you want to first make sure that you want to make sure you're on your job at least 2 years. After 2 years, you also want to make sure your credit score is about that 700 plus 750 to get the highest rates, but 700 at least from a qualification standpoint. if you don't have those basic minimums, it's not to say you can't get qualified. It's just that may take a little bit more underwriting for your situation. And always, these are just the standard practices that lenders are looking at in order to qualify you for the home. The next thing you want to make sure that if you have your credit is in good standing by your credit score, meaning if you have any collections, do you have any outstanding debt, late payments, those things can actually factor into the fact of how much you will get qualified for your home. Third, you want to look at how much down payment you want to put down. Now, the minimal you can put down with a conventional loan, which is the easiest loan to do, or FHA, is 3%. Well, what's the difference between FHA and conventional? Well, sometimes with FHA, you can roll the closing costs in. And the only time I typically say that may be a good product for you is if you're thinking about, hey, will I be in this home only for the next 3 to 5 years? Right now, that could potentially be a good opportunity because, yes, you may pay more in closing costs via the PMI that's added to your closing costs. That's what makes it a little bit more expensive. But from a rate perspective and from a PMI perspective, if you're putting down 3%, private mortgage insurance will be there. That will be cheaper than if you were on a conventional. Now, if you're going to be in the house longer than 3-5 years, then you probably want to look at a conventional loan, because a conventional loan, at least if you're paying down this mortgage, that PMI will actually go away when you hit 80%. Now, PMI is private mortgage insurance, and what that does is it protects the bank for the money that you don't have to cover in the equity, meaning you just didn't put enough down when you started the loan. So after you look at how can I get qualified, what's my down payment going to be, did I look at my credit? Now you want to think about where are you trying to live as far as a home. And the fact is, if you look at how much home prices are around you, if you're in California, or if you're in New York, or if you're in Washington, if you're in one of the higher cost of living areas, just a normal 3-bedroom, 2.5 bathroom can run you $500,000+. And if you're making average income of $61,000, that could be a difficult thing, because that won't even be 25% of your income. That will be more 35% of your income just in the mortgage payment. And then if you've been following me, you know I'm not really an advocate for the 30-year term. I want you to be in the 20, 15 year to get yourself ahead with this, no matter when, if you decide to stay at the home or if you don't decide to stay at home. The 30-year, just over time, you will pay a whole lot more. But it's important that you understand maybe what area you're in, how much the cost in that area will be, and what can you do to put yourself in a home that you will like. If your job changes, or with a lot of people working from home, are you able to move to a maybe lower cost area that puts you in a better affordability of the home? All these things add up to the fact of it is possible for you to buy a home. Now, what about this current situation? Well, the fact is, one thing we know for sure is that the housing crisis of these high prices and the lumber prices will not last forever. Now, will it catapult to a bubble, or will it just increasingly come down? It's hard to say, especially right now, because it seems like there's no end to it. But one thing is for sure, this is a moment in time. And maybe this moment in time means simply that you just need to wait a little bit until prices come back and start to stabilize a little bit more. Because understanding that the law of supply and demand, we're not always going to be a shorter supply on lumber. We're not always going to be a shorter supply on homes being on the market, so that causes prices to come down. And then also, these interest rates won't stay this way forever. So eventually the Fed will raise interest rates. Understanding all these things is to, number one, give you hope and optimism that, hey, you can and will and should be able to afford a home. This may not be your perfect time. And I understand how defeating that can be, but it's better for you to wait than to overpay, because that's what's going to be the next chapter of a lot of people that may have purchased during this time. A year from now or 2 years from now, they will look and understand that that value didn't rise up as quickly as they would have hoped. And housing prices going up 15% in a year just won't occur in a normal economy. I hope this puts a little context into your thought process as you start to look at what are your home possibilities. But understand it is possible for you to do it. And I don't want you to think that because you're saddled with debt or because you're in a bad area or because of what's going on with COVID that this is not an opportunity for you. You just have to plan it out for your situation and start to look at what are your options. And there are plenty more options that I didn't even discuss in this video. But I hope this gives you some context for making this decision going forward. If you like this video, go ahead and give a thumbs up. If you haven't already, please subscribe to the channel. And I can't wait to see you guys in the next video.